All right, we are live. This is episode 55 of the Deconstruction Podcast, brought to you by Jobtable, the simplest way to grow and manage your construction business. As always here, I want to kick it off with a quick review. Actually, this isn't even a review. I actually shared this the other day on Instagram. I'm just pulling it up here. This was an email from a client. Can I pull it up? Give me a second here. There it is. So this is pretty funny. So this is probably the best email I've ever received in my life from a client. So here it is. Well, you remember in that movie Transformers when they were at the lake and the jocks were giving Sam a hard time? And he said something to the effect that he had some books for them to read that had pictures and pop-ups. Well, in a very lighthearted way, that is what I think Jobtable is to me. Aesthetically pleasing, compartmentalized, addresses needs that are really basic in nature that others don't do. I'm going to stick around and hopefully watch your company grow because it will. I appreciate you reaching out, and definitely if I have any problems or questions, I will reach out to you guys. So yeah, that's quite the email right there.
Yeah, that's a pretty sweet review right there. Yeah.
Yeah, that's awesome.
I had to go back and brush up on my Transformer movie.
Yeah. So all right, we got a special guest today, Andrew from LNM Accounting Solutions. He's an accountant, works with a lot of contractors and trade businesses all over Canada, right?
Yes, mainly in Southern Ontario, but
Mainly
across
in
Canada.
Southern
Yeah.
Ontario. So given tax season is right around the corner, I wanted to bring Andrew on and just have a discussion, hopefully, offer some valuable insights, tips, recommendations, things to avoid. So a lot of topics we want to get into. So Andrew, welcome to the show.
Thank you very much. I appreciate the invite. This is pretty cool.
Awesome. If you don't mind, Andrew, take a minute or two, just quickly introduce yourself, what you do, who you help, and give us the rundown.
Yeah, well, we are LNM Accounting Solutions. We are your small business finance department. The bulk of the work we do is bookkeeping and building those reports, but also maintaining them all year long for our clients. So that way, during tax season, tax season is just we like to say that tax is just a few clicks away. And it really does reduce the stress and anxiety during tax season because we've been maintaining it all year long. So that includes bookkeeping, payroll, sales tax, all that. We maintain all CRA filings for our clients, hence the name, your small business finance department.
Nice. Okay, amazing. So, okay, there's quite a few topics and things we want to touch on. But I want to start with this. So something I noticed a lot being in the construction and trades industry and speaking to company owners every day is how dependent and oftentimes overly reliant they are on their accountants on the everyday stuff. And I'm speaking specifically for construction owners. Now, obviously, when I say that, it's probably a great thing for you as an accountant. But on the flip side, again, I speak to people all the time who are using, let's say, a particular software that they love to use and it's very beneficial for them on the day-to-day. But then their accountant will say things like, oh, this doesn't work well with my system, or, oh, I like this software better, you should use that. And oftentimes that contractor just listens and takes their accountant's word for it and stop using that service or software, even though it's beneficial in their day-to-day. So that kind of opens up the question, like, when I'm speaking to these people, like, is your accountant like a partner in your company? Like, they should, but to a certain extent, right? So I think it's obviously great to get your accountant's feedback and hear suggestions, but at the end of the day, the accountant is providing a service to that owner. And if the company owner has their own internal process and system that is really beneficial and works inside their business, do you think it's the accountant's job to adjust to them, not the other way around?
It's definitely a bit of both. I would say more so the accountant's job to adjust to the business owner, but it is a bit of both. So for example, whether the client is using, let's say QuickBooks, for example, or Xero, it really doesn't matter. I think what matters most is the client, the construction company owner, the accountant fitting in with their process. I think that's first and foremost. However, at the same time, I should also mention that the business owner is great at what they do, whether it be managing jobs or trades, but they need the accountant for a specific reason. And so they do need to rely on their accountant for processes and practices, best practices to get the job done. So it is a bit of both. When it comes to the type of software being used, they should follow, especially the accounting software. The accountant should follow whatever the business owner decides to use, whether it be QuickBooks, Sage, Xero, whatever. But the accountant should really follow their process and just add to it to make it most efficient.
Yeah, and that I totally agree, and I agree with what you're saying, but it was really evident to me. I have an accounting degree. I'm not like put an accounting problem. Like I won't even know, what to do at this point. That was a long time ago. So but I understand the world, and I've been in other industries before, but like it was really evident working now with contractors on, but just again, how overly reliant they are on accountants compared to other industries that I've been involved in. And I can see that being both good and bad, because I've personally seen a lot of situations where accountants are not giving the right advice.
Yeah,
It's more like lazy advice, like, to the point of like, yeah, I don't want to learn this software, so don't use it. Use this one that I want to use.
Yeah, it's really unfortunate when that happens. But going back to your opening email, I don't want to put down jocks or anything like that, because we all have our strengths and our weaknesses. But one thing that I really noticed is that when it comes to trades and contractors, they are great at measuring those angles, swinging those hammers, and building stuff, which is a huge part of our economy. But maybe when it comes to filing the GST or reporting to banks for a mortgage or a loan and stuff like that, that isn't their strong suit. So they really do depend on their accountants for that. And so it really comes down to a matter of trust. I find, once they have a good working relationship, they can rely on each other to get the job done. It takes both sides.
Do you notice, Andrew? Obviously, I can speak for contractors on what I notice they do well and what I notice that they lack, in general, right? Like we're not going to bundle everybody up in a group, but I do notice that a lot of accountants, my accountant included, which has taken years for us to get on let's just call it an even playing field, where they're stuck inside a box. And when a company is trying to, basically make their processes a lot more simpler, right? Because it saves them 3 hours, 5 hours a week. Like I'll give you a prime example. Like I remember at the beginning, we were using Simply Accounting, right? And I remember this was one accountant we were using before the current accountant that we've been using now for like 10 plus years. And when we switched over to him, the first thing was, oh no, you guys need to get QuickBooks. And for me, I remember who's now my wife now, I remember she was going crazy because she's like, I have to start learning a whole other tool. And I remember having a talk with my accountant, and I was just like, when we switched over, it's like, look, this is what she was trained on. Obviously, I know you use this, but are you hiring me or am I hiring you? Right? Like, you know what I'm saying? And getting back to Klaas's question, this is where I find, because myself being a tradesman and I talk to these trades and they're like, well, I'm going to run it through my account. I'm going to see what but I don't think my account's going to like this. It's like, wait a minute. But if this is going to save you 4 to 5 hours a week, you see times, 50 weeks or whatever it is, isn't it more beneficial for you to have a talk with your accountant and just say, this is what I'm going to use. Tell me how we can streamline this.
How we can make this work.
Exactly, between you and your firm and mine and my firm, because in the end of it, I get it. Even if the accountant says, well, it's going to take me an extra 4 hours or an extra day at the end of the year to kind of, put everything in the right, let's just say files, and stuff like that. So, okay, it's going to take you an extra day to do the filing as the accountant, but it's saving you 4 to 5 hours a week times 50 weeks. It's like, wait a minute, this is kind of like a no-brainer. And when I word it like that, that's when I notice a lot of the contractors take a step back and they're like, shit, you're right. You know, I didn't look at it like that. And it's like, yeah, you need to have sometimes, like, look, me and my accountant, sometimes we go head to head, but in a good way, right? And sometimes I'll make them, you know, because I get suggestions from other people in the industry too. And you know, it's a simple conversation of, well, you know, so and so told me that they did it like this, you know, and a lot of times,
Yeah.
you know, the initial is, well, I don't know. But then it's like, okay, look, can you just look at it? And then he'll come back to me and he's like, you know what, shit, I think you're onto something here. Because I find like it's a partnership, like you said, right, Andrew?
Yeah.
It's a give and take on both sides, right? I might do something different than what you're used to doing, but maybe you'll learn something off of me being your client that you can now apply
Exactly.
to the field, right?
And I come across this conversation somewhat often, especially with new clients. I find that, and again, this is just my experience, but the older accountants have that conversation very often where they are kind of stuck in their ways. No, this is the way we do things and we're not going to deviate from that. You know, which is cool to an extent, but we like to use software. You know, it really does speed up the process, really does streamline a lot. And so another thing that we like to do is kind of, because we have a number of clients across a number of industries, including construction, we are able to learn about different software, different processes across various industries and apply that to our own internal process and share that with our clients. Right, so that's one thing that we definitely pride ourselves on is process improvement, speeding up the overall process, and how is the most efficient way that we can do things, regardless of software and as you said, it's a partnership. So I do see what you're saying, and I have heard that from clients coming from older accountants who are really stuck in their way. Again, there's nothing wrong with that, but I like to adapt to my clients to a certain degree. But if it does, at the end of the day, if it's not a good fit, it's not a good fit. Then you know it is time to move on. But I want to stress the fact that it is a two-way street and it is a partnership.
Yeah, for sure. So a lot of like our Jobtable clients and other contractors listening to this use QuickBooks for their accounting software. That seems to be the go-to. It's been around forever. It's a household name. Jobtable, we're actually an integrated partner with QuickBooks as well. But with that being said, there are a lot of other really good, in my opinion, even more user-friendly accounting softwares out there. Why do you think QuickBooks is that one that everyone uses?
Well, I find QuickBooks to be the most user-friendly. I did start on QuickBooks Desktop. You know, part of school we learned Sage for a bit, and I hated it. There is a bit of a war between Sage and QuickBooks, but yeah, I prefer QuickBooks. I find it to be the most user-friendly. There are a few others that are good, but obviously QuickBooks and Sage are the most popular. I kind of want to say QuickBooks may be a little bit more popular towards the smaller businesses, and Sage enterprise level for those larger businesses. And there's like bigger ones. We get into ERP software like
Oracle or
or Oracle. Like those are huge. But in the small business space, QuickBooks is definitely the go-to. I think they're just more user friendly. Now, another reason, I learned this a few weeks ago, and I was sharing this, I kind of alluded to this in our email conversations last week, Costa, where I had a conversation with a contract company owner, and he was at the QuickBooks Connect show in Vegas last year. And he has having a conversation with one of the guys from QuickBooks. They're all very, they like to talk, like they like to chop it up. Nothing to do with these trade shows anyways, right? And so they got to talking, and he brought up other accounting software, because there's other accounting software out there. Some are more popular than others. And he kind of asked, well, how does QuickBooks maintain a hold on the industry? And he gave an example of, it wasn't accounting software, but it was like quoting software, very similar to Jobtable. And he said that a lot of companies, like quoting companies, are trying to build up their accounting software. And QuickBooks says that once you build up your accounting software, you basically become a competitor of QuickBooks. And so then at that point, they just cut off the integration. And if there is no integration, then you can't seamlessly work with that software anymore. And so a lot of companies like Jobtable, they want that integration. And so in that manner, QuickBooks really does have a chokehold on the industry by saying, if you're going to build up your the accounting portion of your software, then we can't work with you. Now, there are a couple of them in the US mainly that have built up their accounting portion of their software and still integrate with QuickBooks, but that is only because QuickBooks is the credit card processor for that software. So even though that other software that quoting software may have built up their accounting portion of their software, anytime their client pays by credit card, QuickBooks is still the credit card processor, so they're still getting a cut of the action. So that's just one thing I found interesting. One of the ways that QuickBooks is literally, maintaining their chokehold on the industry.
100%. Yeah. I mean, look, on the surface, you might look at that like, oh, that's a negative. I actually respect that. That's like a great business model.
Exactly.
Yeah, from a business standpoint.
Leverage,
yeah, from a business standpoint, that's great. I just always look at it for the end user, right? I'm always looking at that because, look, I always say, listen, we all need accounting softwares, but I always say every single industry is different, and I can speak on the construction industry because, I've been owning and operating for this is our 17th year. And one thing I've noticed, and it was funny, it really dawned on me a couple of years ago. It's like, I was at my barber getting a haircut, and it's like, my barber's using QuickBooks, right? And then, the corner store is using QuickBooks, the clothing store is using QuickBooks, right? A construction company is using QuickBooks. So it's a great accounting software, but what I find is, like you said, there's a lot of companies that are building these quoting softwares. Let's just call it. Let's stick to the construction industry for a second. And what I notice is it's a good accounting software, but it is not, let's just say, that user friendly when it comes to, on the construction side, your project management, your change orders. How are you managing this? How are you managing that? Like you literally, and we went through it, right? Like that's how we came up with Jobtable, because I found that not only am I on site and I have to go look at a job and I have to go organize the guys, but then I have to run back to the office and start printing out papers. It's like, did I invoice this? Did I invoice that? And have to do, let's just say, the bookkeeping behind a desk, right? And for our industry, it's not really reality, right? Especially when you're trying to scale a business. Now, I know a lot of people say, well, you have QuickBooks Online that you can use on your phone. Yes, but you can attest to that. What you could do on your phone is not the same as what you could do on your desktop. So essentially, that contractor, he's kind of bound to having to get back to his desk and spend hours. And I noticed that too, as I was, starting my family as well. I until midnight, I'm sitting behind my computer because I had to do everything during the day, then attend to family life. And then after, the kids go to sleep, that was the only time I had, right?
And that's why I really appreciate Jobtable. It really is that bridge between the accounting software and the field. Yeah, I really enjoy that aspect of it. I've had an opportunity to kind of poke around with the free trial. I haven't used it as much, but I really enjoy that. It really is that bridge between the accounting software and the field, and so it is a great bridge that way for sure.
Yeah, and sorry, I just wanted to add, and the main reason for that is look, you guys are extremely important. As an accountant, I always say you can have any business. Your accountant has to be just as good as you, right? In what you do, right? An accountant is extremely important. And like you said, it's that bridge between the two. So it's somebody like yourself where you're open-minded enough to understand the industry enough to be like, guys, look, you can use something like this. It integrates. And again, this is not just a push for Jobtable, right? There's, like we talked about, there's many softwares out there, right? But there are a lot of accountants, which we've been on calls, that if it's not QuickBooks, you see what I'm saying? They don't, it's like, don't use it, right? And it's mind-boggling because it's like, wait a minute, you don't want to save your client time and money? This is,
So, QuickBooks is great, but regardless of the accounting software, I think the bottom line is the client, the construction owner, should be able to use whatever they want to use and have the accountant adapt to them. And so one of the great things about QuickBooks, or really any good accounting software, is the ability to retrieve that data and just put it in with maybe a recurring journal entry, or there's always, in most cases, there is integration between the two where that information can be pulled into QuickBooks so that the construction company owner or the tradesman doesn't necessarily need to be in QuickBooks. They can just continue to do what they do in Jobtable or any other software and have that data being pulled in, whether it be automated through integration or manually, maybe once a month or once a quarter or something like that by the accountant. But really, there's under no circumstances should the accountant be forcing a trades guy or a construction or a contractor to be augmenting their process for the accountant. It should be the other way around, because there's software for that, or even if it's a manual journal entry or something like that, it's once a month or once a quarter.
Yeah. Yeah. Speaking on the integrations, right? So as you know, thousands of third-party apps probably integrate to QuickBooks, right? Including Jobtable, all of our competitors as well. And clearly the reason why these integrations exist is because, like Johnny was saying, like at the end of the day, QuickBooks is not really designed for a growing contracting business.
It's accounting
for the
software, that's
day-to-day,
it.
to manage the day-to-day, right? It's an accounting software. It's not meant for you and your team to go in, manage projects, change orders, communication, progress updates. So that's why companies like Jobtable exist in a lot of ways in regards to the integration. So when do you think that point is where a contracting business comes to the realization that I need something other than QuickBooks to manage the day-to-day?
Something other than QuickBooks?
Yeah.
Yeah, that's pretty much once they are, I want to say at like, it varies. I don't think there's any one specific metric where that happens. That's a very good question, actually.
Like, for example, like I would say, like from what I see, I was wondering if you had any insights, but like I noticed that usually when someone's just starting out, it's like QuickBooks seems to be that go-to for sending out quick quotes and invoicing. But I feel like once you start adding 1, 2, 3 employees, this is where you start to outgrow it, because now you need to give access to people and like communicate. Like there's more processes involved, which QuickBooks is not designed for.
I would disagree with that. For example, I have one of my largest clients actually is a contractor, 32 employees, 9 mil in revenue, and QuickBooks is working great for them.
But they don't use anything else other than QuickBooks? Like,
Builder trained.
That's what I mean. Yeah, they're still using a software like outside. Like I'm talking about. I'm not talking about replacing QuickBooks. Like you always need QuickBooks. I'm talking about the day-to-day, like communicating with the guys.
I see. Orders, yeah. So actually, in that situation, I would say that QuickBooks is not necessary to start. And I've done YouTube videos on this on my channel where QuickBooks is not necessary to start. For example, Jobtable would be great at sending invoices, great at creating those quotes, and communication with the team. But from an accounting standpoint, no, you do not need to start with QuickBooks. Depending on the business owner or the accountant's comfortability or comfortability levels with Excel, I actually recommend that they start with Excel. QuickBooks is like $50 a month. In the beginning, it's not necessary. I would start with that. It's not necessary. You can operate for years without it. It's more so the quoting or invoicing software that is most important to start. And I think that's very important for anyone getting into the industry to start with. QuickBooks is not, or accounting software is not the first thing you need for sure.
See, one of the lines that not even a line, I don't even want to say it in that kind of tone, but one of the things that I've been saying to people is you got to leave QuickBooks to the accountants, right? Sure, you should have a QuickBooks account, right? But you should always be using some type of software that makes you mobile, that doesn't stop you, right? Where you can record, like you said, bring in the data, right? So you can do quotes that are, you know, user friendly on the spot, whether it's on your phone, your tablet. You can keep going somewhere where, you know, if you stop to grab a coffee and you have to invoice somebody, you don't got to sit there with pen and paper behind a screen, right? You can literally do simple calculations on some type of platform that does it for you. And then, like you said, bring in that data, you know, again, because if you're a smaller company, let's be honest, like you said, you know, maybe once a quarter, right? That the accountant even wants to look at it, right? Like we do, like we also have in our software, we also have like where you can, you know, add, you know, any type of bills, or, you know, whether they're gas receipts, whether it's specifically for job costing, where it makes it simple that they can take a picture, they can upload it like that. So God forbid something didn't get transferred over, but you needed it at that exact moment, right? You can still go in and find that, right? And I find that a lot of people, they think that the second they open their doors, they need QuickBooks, right? And it's like, look, in a way, yes, you need some type of accounting software to record. But the day you open, like I always find, and I don't know if you agree with me on this, Andrew, but I always find, just like a new accountant coming into the industry, it's very important that your processes that you implement from the beginning is something that you can grow with. And it's kind of like, you know, when you're trained a wrong way, or you're trained on using, especially when it comes to accounting softwares, like, you know, you're the best one to speak on this, to switch a company from one platform to another after it's been rolling for so many years, it's hard. It's a hard transition.
It's definitely hard.
Yeah. So I always say, you know, because I always tell people too, like we're 59 a month, right? So I always tell people it's not a sales tactic. If you're one man in a truck and you're trying to scale a business, right? The best thing to do is to have to implement these features right from the beginning, because not only does it help you save time, be able to scale your business, but it also helps the accountant. Right? So imagine I'm a new client. I come to you, Andrew. I'm one guy in a truck. It's like, look, this is what my view is for my business. Obviously, okay, I know I need QuickBooks because that's something that you work on, but I need something to help me out. So they end up getting a platform like Jobtable from day one, so that as they're scaling their business, you know exactly the way this company operates, right? And as they're growing, that growing pain is just much less, because I can speak to it when I tried to add processes and procedures, you know, as we were bursting at the seams. That was the hardest time, right? But that's also what, you know, getting back to like contractors, I find that they only want to make these changes, or they only want to add certain things to their business when they're bursting at the seam, when that's actually
the hardest time. Yeah, exactly. So really, there's going to be growing pains no matter what they do, as any company grows. But yeah, it's not the best time to make those changes during crunch time when it's busy. If there were to be any changes made, I would highly recommend doing it for a year end. That way, between the two fiscal years, there's a hard break between the old system and the new system, whatever that may be. But that's the best time to make change. And also, depending on the contractor's busy season, when they are getting started, I would highly recommend strategically selecting their year-end date. A lot of people think that December 31st is, you know, just the stereotypical year-end, and it kind of is. But for example, I wouldn't recommend an excavator having their year-end in spring, because during their tax season, that's their busiest time of year. So that's not advantageous for them. Also, I would highly recommend talking to an accountant before selecting that year end, and just to make things easier moving forward.
Yeah, that's a good point. All right, cool. I want to switch gears a bit. Before that, though, just to be clear for anyone listening, I think I think accounting software is are necessary.
Sure.
Any business definitely needs an accounting software. Although there's a lot of options out there. Personally, I think QuickBooks is great. They make it easy for a lot of companies like us to, like you said, bridge that gap, make it easy. And at the end of the day, it does help both parties, especially the contractor, or the person using both platforms in a very seamless way. So I'd have to, tip my hat off to QuickBooks for making that bridge and the API access and all that. So I just want to make that clear for sure. With that being said, it's tax season is around the corner. A lot of companies are starting to hopefully get their ducks in a row.
If they have a December 31st year end, yes.
Yeah, true. But I want to get into some specific tips that contractors and business owners need to know. First of all, are there any changes this year with the CRA that people should know about?
Not necessarily any change with the CRA. The deadlines are still the same. The one thing that I would kind of stress is that CRA is definitely checking up on balances owed and digging into things a lot more, definitely to recoup some of those expenses that they incurred during COVID. That's a big thing ever since COVID. Government spent a lot of money, so they are kind of digging into things a little bit deeper, asking more questions, doing more of their due diligence to recoup some of those expenses, whether it be through sales tax, income tax, payroll. So they are definitely they're definitely scrutinizing paperwork more these days.
And I don't want to get political on this, and I'm trying to hold back, but I just can't. Because I know exactly what you're talking about. And I want to ask you, Andrew, because, my accountant, talking to him, I laugh with Costa all the time. I've always found him to be miserable, but now I understand it, right? Because he has a passion behind what he does. And I can see that you have a passion behind what you do. And we had a long talk, in November. And one of the things that he did describe is that there's a lot of this going on where they're coming after contractors for what, let's just say, the government did. And now they're penalizing these small businesses essentially, right? They're digging in, they're asking a lot of questions. It's like they're trying to find something to come back with money, you know what I mean? To make us pay more. And I just find this very unfair. I truly do.
It is.
We are a small business. We are the heartbeat of Canada. And to go after the small guys that are literally just trying to make a living, sure, you might find a nuance of, you owe us $1,700, but what they don't find is we have to then go to you as the accountant, which means it's your time, more billable time, which I know in a sense it's great for you in business, but like my accountant says, he goes, I don't care about the money, right? Like this is ridiculous because it's literally like you're talking to a robot. There is nobody to have a common sense, a common ground, right? And I'll give you an example. They'll hit you with some particular, let's just say rule in the book, and it's like, yeah, but hold on. Mm-hmm. You guys are saying this. You guys are coming to us 4 months after, and you guys are charging us for interest when this is the first time you brought it up.
Yeah.
And then basically, what is said? Well, you can either pay it now or you can fight this. It might take a year for you to get a response, but in that year, the clock is ticking, and you're still getting charged interest. Right. Yeah. So I'm trying not to get political on here, but I try to keep it real for our listeners, because the reality is, look, man, I'm a contractor. I face this shit all the time, and it's extremely unfair. And to pose a question to you is, number one, do you think it's fair? Which I can see by your reaction, it's not. And number two, how do we correct this?
That's an extremely loaded question. Yeah. So first of all, it's not politics. It's just government. The government is slow. It's a huge organization, and they're just slow. I've submitted paperwork, and it literally takes time for it to come across someone's desk to be addressed. And so, to kind of mention that the time lag. You said 4 months in your example. By the time someone actually looks at it and addresses it and goes back to the business owner and say, hey, we have a problem here, let's talk about it. Yeah, it could be 4, 5, 6 months, or sometimes even years down the road. And by then everyone's forgotten about it, and they will start charging interest the moment they recognize it. And so yes, it does make my job more important for sure. Not as bad in the U.S. I think in the U.S. they make it they intentionally make it difficult for business owners so that they must rely on the professionals, on the accountants and lawyers. It's not so bad in Canada, but I do hear what you're saying. But at the end of the day, it's government and it is important. And so that really stresses the importance of having a good accountant from the beginning. Now, I'll tell you two things. One, I'll ask a question. Are you guys familiar with brown envelope syndrome?
No.
No. Brown envelope. Brown envelope. Well, it's if you don't know what it is, that's okay. Don't feel bad. I made it up. Brown envelope syndrome is the feeling of fear and anxiety when you get that brown envelope in the mail from CRA. It's typically them asking questions or just checking up on maybe a certain aspect of a filing. And very often people don't know what it is or what they're asking for. And so they'll just send it to their accountant. And yes, to go to your point, Johnny, that's more billable hours. But the way I see it and the way we handle things is I personally or my team doesn't want to file something unless they are able to anticipate the questions that CRA may ask and have those questions answered, or at least know where we can get those answers before we file. So for example, let's talk about GST. That's probably the most common one. CRA will send out a standard letter that says, hey, we have questions about your GST. Send us 10 invoices showing that you collect sales tax. Send us 10 expenses with sales tax on it so we can gauge your sales tax expenses, along with some other general information about your business. If we have access to the invoicing software, then we can easily pull that ourselves and address it with CRA without even the client even knowing. Or when it comes to the expenses, typically for GST, they want to see the GST ledger, which details all the sales tax transactions. So before we file sales tax, I'll actually go through that sales tax account and kind of mainly pay attention to the big ones and say, just make sure that internally, okay, that sales tax or that sales tax spent is a software, so we can easily log into that account to download that invoice if necessary. Or maybe another one is furniture or something like that. We can easily go back to that furniture store and say, hey, can you give us the receipt for this in case you need to send it to CRA. What I feel very uncomfortable with is if there is no paperwork to recall later on. So for me, I want to make sure that if CRA comes asking questions, and very often they will ask the accountant who filed it first before going to the business owner. And so I want to make sure that I'm comfortable enough to answer those questions before I even file it. So that's the way I call it, being audit ready and safeguarding the client from experiencing brown envelope syndrome. Because very often CRA will come directly to the accountant who filed it rather than going to the client or the business owner themselves. That's just the way we operate.
Yeah, that's great. I have brown letter syndrome for sure. I get that. It's like, oh, great.
I have brown letter anger.
As a lot of people do, yeah.
That's a good one. That's good. All right, no, that's really good. What about like some, get into like some specifics here. Like, what are some common things you see? Again, we want to focus on contractors. Specific things that contractors are not doing right or could be doing better. Whether it's like strategic expenses or like pulling out money when they're not supposed to, or just like
Yeah, first of all, just staying organized. That is step number one. Going back to my example, keeping all your invoices together, invoicing software really helps. And then keeping all your expenses together. Then that's really the tricky part. And so what I highly recommend is using plastic for all expenses, your debit or credit card, because at the end of the year, and this is regardless of accounting software, I do this without accounting software. At the end of the year, at the end of the period, you can log into your online banking and export those transactions to Excel. And I actually use that Excel file to create the income statement and balance sheet that the tax filing is based on. So that just goes back to our earlier conversation where accounting software isn't really necessary, because as long as you use plastic for everything, we can use that Excel file from those transactions from online banking and create the report that is needed to file. So that's one. Using cash, is cool, but it makes it very hard to trace. Because then you're relying heavily on the paper receipt, and let's face it, receipts fade. It's easy to lose. Put in your pocket, they fall out. I've seen contractors get in their truck and literally just throw it on the dashboard, and then on a windy day, you open the door and they just blow right out the window, right? So
you gotta look at the Jobtable commercial. That's why we're not.
I do too.
Yeah, you gotta look at our commercial. That's
or it falls into their Tim Hortons cup.
Yeah, exactly. So being organized is step number one. That's extremely important. Beyond that, having a good relationship with your accountant. Because the way I like to operate anyways is to have a regular review during the year, especially if GST is quarterly. Just having that conversation every quarter with both the business owner and the accountant, looking at the reports together, talking about it, come to an agreement. It's really an opportunity for the business owner to say, hey, what's that? Why is that there? Why is that negative? What does that mean? And just really have that conversation, get all their questions answered. Because during that conversation, the business owner or the accountant will say something that will trigger a memory or trigger an action item that will help the situation. So just having that regular conversation, I think, is extremely important. So organization, having that regular conversation during the year, those two are probably the biggest ones. And then also, couple things is, first off, getting access to your CRA account. That's extremely important, because if there's any issues with CRA, having access to your online CRA profile, whenever CRA sends that letter, you'll get an email saying, hey, there's something for you to look at. So you can log in, you can download that letter. Instead of it coming in a brown envelope, you'll get it in your email. You log in, you take a look at it. And if you don't understand it, just email it to your accountant and be like, hey, what is this? Or sometimes if the accountant has access to your profile and you get that email saying that there's something there, you can just forward that to the accountant and say, hey, log in, take a look at this, let me know if it's something I need to pay attention to.
And should most people have their accountant as like an authorized representative in the CRA?
Definitely. Yeah, and that goes to what I was just saying. If you don't understand it or if you don't have time to look at it, you shouldn't necessarily need to. You get that email saying, yeah, there's something for CRA to look at. Just forward that to the accountant and say, hey, can you take a look at this and let me know if it's something that needs my attention.
Yeah. All right.
So those three are important. Organization, having that regular conversation, and then access to your CRA profile to just deal with anything real quick rather than waiting for it to come in the mail.
Yeah, for sure. Let me ask you this question. So, for the typical small business, unless you're a publicly traded company, as a small business, at the end of the day, your goal is to reduce your tax liability in a strategic way. So, what are some of those ways a typical company can achieve that? Like what are some expenses that maybe some people overlook or
So I'll give two exampple. I'll start with the easy one: business use of home, business use of anything personal. So if you're operating a business out of your home, technically a portion of your home expenses is a business expense. So let's say your home office is 15% of your home, then 15% of all your home expenses is a business expense. 15% of your mortgage interest, 15% of your rent, your utilities, etc. And that's something that's very easily overlooked. If you're driving your personal vehicle for business purposes, then same situation. And there's two ways to do this. If you use your vehicle for, let's say, 50% business related, then 50% of all of your vehicle expenses is now business expense. So that's your insurance, your fuel, car washes, maintenance, etc. Now, the other way to do it, and this is typically more beneficial for the business owner to get a higher expense and reduce taxable profit, is to record kilometers. So if they drove, let's say, 10,000 kilometers for the year, then the first 5,000 is at like 63, and this changes every year, but the first 5,000 maybe at 63 cents a kilometer, and then anything above that maybe at like 57 cents a kilometer or something like that, and it changes every year. So that's probably the more effective way to record the mileage, and it ends out being a bigger expense than recording a percentage of all vehicle expenses. Now, CRA, if you're going to do that, what CRA wants to see, and not too many people actually do this, is every time they get in their vehicle, record whether this is a business trip or a personal trip. And then at the end of the year, add up all those business trips, all the business kilometers, and multiply it by the annual rate. That's what CRA wants to see. However, I want to say maybe 0.5% of all people actually do that. Right?
Yeah, it's not real. It's not realistic.
Yeah. So those are the first ones. And secondly, I say spend strategically. And this can get a little iffy. So I have conversations with a number of real estate agents. So I give this example. If there is a real estate conference in Hawaii, definitely go. That's a business expense, or a large portion of it is a business expense. There's a huge building show in Vegas every year. You guys should go. Have a great time, and a large portion of that is a business expense. The way I see it is and this can get iffy, and I highly recommend that you do it strategically, but spend in a way where it's a clear business expense, but you benefit from it personally. And sometimes that requires, cash flow in order to do that, but that's the bottom line. Have business expenses strategically where you are personally able to benefit from it.
Mm-hmm. That's a good point. Can you talk about the difference between paying yourself as the owner through payroll versus dividends, and when one is better than the other?
Funny you should mention that. I have a quick cheat sheet to describe that. Can I share my screen here?
Please, yeah.
Yeah. Okay. And I don't know.
Right at the bottom, there should be a share.
I see it. So I'll start talking about it first. Here it is. So, and I put together this presentation. I'll zoom in a bit. So let's, I start off with an example where, let's say Bob is employed as a contractor and he makes $100,000 a year through payroll, right? Bob is going to spend almost $25,000 in income tax on a $100,000 salary, but he's not going to notice it because it's come directly off his pay, right? So that is a normal situation. At $100,000 per year through payroll, you're going to spend almost $25,000 in income tax, but you're not going to notice it. Now, if Bob decides to go out on his own and open up his own contracting company and profit $100,000 and then take that $100,000 as his own personal dividend, now we have to gross up that dividend by 15%. So he'll take $100,000 actual as his dividend, but then for tax purposes, we need to gross it up by 15%. So 115 will be his taxable income. And in that situation, he's going to spend just under $10,000 in personal income tax. Okay? Mm-hmm. So if you look at those, and then also the $100,000 in profit will be taxed at roughly 12.5%. And so he's going to, the income tax that he's going to spend on that $100,000 profit is $12,500, plus that $100,000 dividend he's going to spend around $10,000 in personal income tax, and together that's going to be around $22,000. Now, this is a very simplified example because there's the dividend tax credit, and so it's actually not that high, but I'm just using even numbers to illustrate a point. So to go back to the first scenario, Bob as an employee pays around $25,000 in income tax, and as a contractor, an owner of a corporation, because that's important, a corporation, he's going to still profit $100,000, and between personal income tax and corporate income tax, he's going to spend around $22,000. Now, there's not much of a difference there between $25,000 and $22,000, and this is why the third scenario is so important. where Bob will still, or the corporation will still profit $100,000, and they'll still pay roughly 12.5% on that $100,000 profit. But the big difference is that it's Bob's company, it's Bob's bank account. Bob can technically do whatever he wants. He can still take that $100,000 and do whatever he wants with it, but he doesn't have to claim all of it as personal income in that year. And so CRA calls it integration. And they try to get perfect integration between payroll tax and dividend tax, and ultimately it is kind of achieved. However, being a corporation, the corporate owner has far more control as to how much they claim in the year that they choose. So even though they took 100K, they could claim maybe 50, and in this situation, if he claims 50K of personal dividend, he'll end up spending maybe $2,000 in income tax. So that's still the $12,500 of corporate income tax, and then the roughly $2,000 of personal income tax, and only spending around $14,000 in taxes altogether, personal and corporate. Mm-hmm. So I'll stop sharing my screen there, but that is a pretty good example of the difference. And the Bob, he'll still end up paying personal income tax on that income, that personal income, that money that he took, but didn't claim as personal income. But he just has more control over when he claims it. Maybe he tries to claim it next year or the year after, but it's just a matter of postponing or deferring the taxable income. So he just has more control.
Yeah. So is there a limit on like how much you can defer it? Like how many years?
CRA will want you to claim it in the year that you took it. However, sometimes that is very difficult to calculate with money coming in, with the business owner putting money into the business to keep it afloat and then taking money out to pay themselves. It really is a revolving door. And so I don't want to say difficult to track, but technically CRA would prefer if the business owner claimed the income that they personally received in the year that they took it. There are some creative ways to avoid that. For example, and we're getting into the weeds here a little bit, but a business owner can, let's say, refinance their home and put $200,000 into their corporation. So they basically loaned the corporation $200,000. The expenses or the interest expense on that $200,000 loan is a business expense because it's for the business. So they can then only pull maybe $50,000 from the company to pay their personal expenses, home insurance, fuel, groceries, etc. So they're only claiming a $50,000 dividend, but the expenses on the loan is a business expense. So they're increasing their business expenses and having even more control over what their personal income tax says. Mm-hmm. Yeah, and that's just one strategy.
Yeah, and just to get back to what you said, just for all of our listeners, every business owner that has started a business, they put money to start the business. And I notice a lot of people, they fail to realize this. So for example,
shareholder loan.
If I start a business today and I put in 50,000, right? I have to buy the truck. I have to, put money into the account. I have to buy materials, whatever, tools, right? That's something that I took out of my pocket to give, a quote unquote business loan to my own business. Mm-hmm. So now if I put in 50,000, let's just say throughout the year, I only took 50,000, there's no taxable income because that is a business loan. And a lot of times as well, right? Correct me if I'm wrong, Andrew, I'm no accountant, but from what I've heard as well is when you give a business loan, you can also charge your own business interest. Now that interest that you do hypothetically charge
personal income
is a personal income. Like I know, and there's also the flip side. So let's just say your business is, cash flow positive and you want to go out and buy a personal vehicle for home. So the business lends you 50 grand. Yeah. And I've learned this the hard way where it's like, no, that business has to charge you interest. Yeah. Right? Because those are CRA rules, right? So I think this is, especially being tax season, I think this is very key, especially for those new businesses that people have to realize that, listen, man, that tool that you bought, that truck that you just bought, You know, anything you put into the business that the business did not create the revenue to pay, right? That is technically a shareholder loan, right? If you're incorporated, correct?
Regardless, whether you're incorporated or sole proprietorship, it's treated the same way.
It's true.
Obviously,
Okay.
you can't. There's no dividends. The dividends aren't a factor for a sole proprietorship, but it's the same principle.
Okay. Okay. Yeah, I just wanted to really throw that out there for our listeners because I find a lot of people, they miss that, right? So people have been in business 5 years and they're like, "Oh, really?" And it's like, "Yeah, like you should go back and claim that."
Yeah.
Right? Like if you put 50 grand into the business, you know, if you were to take 50 grand out, they want their cut. But if you put 50 grand in after tax money that you invested into it, your business is entitled to pay you that back as a loan.
Exactly. And going back to our earlier conversation, where that just makes the accounting so much more important in the beginning, is where if you're using your personal bank account, your personal credit cards for those business purchases, if again, export those transactions at the end of the year, and at that point it's very difficult to miss those transactions because it's on your personal bank account or credit card, which you have been using for business purposes, especially in the beginning. So it's a perfect way to make sure those expenses are caught.
Yeah, that's a good example. Really quickly, coming back to the Bob payroll dividend example, I know this is very different in every single business, but would you say in general it's good to have like a blend of the both, like find that balance?
Yeah, and again, we're getting a little bit into the weeds here, but a lot of people will pay themselves around 60, 70K just to maximize CPP. And they'll do that through payroll in order to maximize CPP, just so that there's something there to pull in retirement. It won't be much, but CPP is there. I don't want to say free, but it's required for all payroll employees, and then you do get it back in your retirement. So they'll pay themselves around 60, 70K just for that, and then anything above that they'll take dividends because the tax rate is lower.
So let me ask you this: What if you're a business owner who is not reliant on CPP? You don't even care about that retirement because you're funding your retirement in another way.
Yeah, then I would just go straight dividends.
100% dividends.
Yeah, 100% dividends.
Yeah.
See, I faced this, and my accountant wanted the blend. And truthfully, and I don't know if you could touch base on this, but they just said, obviously with dividends, when, again, when you're buying a house, let's say you're going to build or anything like that, and the bank wants to see it for some reason or another, dividend is looked at differently than
it is. Yeah.
Yeah, and this is where getting back to like what's fair and what's not fair, right? It's like you're making it hard because obviously, they're in the back. And I always look at it like that commercial, hands in your pockets. I don't know if you remember that commercial.
Yeah, hands in
Guys
your
just
pocket.
walking. Yeah, there's somebody like, and it's like, come on, man. Whether I made 100 grand in dividends
Yeah.
or whether I did 100 grand through payroll, I made 100 grand, right? You know what I mean?
I think most lenders now, like if you have a good lender who like works with businesses, they understand that.
Yeah, and there's different programs. So for a sole proprietorship or any business owner, there is a specific program for them, whether it be a sole proprietorship or a corporation. So there's different programs depending on the type of income that the applicant has. So they're flexible that way, but in general, yes, dividends are not as favorable as regular payroll.
Yeah.
Which is ironic, right? Like even you as an accountant, it's like, let's be honest, like what's the difference between the two?
Well, I haven't looked into this, but my understanding is that as a business owner taking dividends, especially owner of a small business, things can change in an instant. Business could go under, something could happen. And so the fact that a mortgage applicant has dividends signifies that they are a business owner, and there's just more risk with that business owner because you don't know the state of their business. And so typically when the bank sees dividends, they may ask to see the corporate documents as well. The last 2 years of the corporate tax returns, just to see how the business is doing. And if the profit or revenue is not there to support those dividends, then that's a reason to decline the mortgage application. So yeah, there's many moving parts to that conversation. And so what some people do, and I was kind of reluctant to say this on air, but what some people do is they will, going back to that Bob dividend situation, they will only take a low, maybe 50K of dividends for a few years and let that shareholder loan pile up. And then for the 2 years just before they purchase a home, they'll claim a high income to qualify for that mortgage, whether it be through dividends or payroll, just to qualify for that mortgage. And then once they get the mortgage, they'll drop their income down again.
Yeah.
Just being a business owner, there's so much more flexibility in what your income says.
Mm-hmm. Mm-hmm. Yeah.
It gives you just many more options.
Yeah.
All right.
And we want to ask these questions just because, it is tax season. We want, listeners to really understand that, like you said, there's many different ways to run the business. And what I find, and correct me if I'm wrong, and I'm not talking down to contractors, but a lot of contractors, they're amazing at their craft.
Exactly.
But then when it comes to these technicalities, this is where you need somebody like an Andrew in your corner to really guide you through, right? That's where I feel, and again, don't take this the wrong way. That's where I feel that partnership between you and your accountant is very important, because that's where the strategic side of finances comes in. Right? Because just, the way we look at it as a contractor, it's like, man, I need to take home this amount, because, if I just close up shop and go work for this guy, I'll make more money if I can at least take home this amount.
Yeah.
Right. And that's where it takes somebody like you to be like, well, do a blend, or, you're at this point right now, just do a dividend. And I think that at this point, these are the conversations a lot of contractors should be having with their accountants.
I completely agree. I used to say this all the time, regardless of what industry you're in, you do what you do best and let us handle the rest.
Yeah, 100%.
Beautifully said.
That's a good way to wrap this. Is there anything we didn't hit on that you want to mention?
No, we actually covered a lot. I wasn't sure we were going to get through all of it. But yeah, the main thing I want to stress is just having that regular conversation with your accountant or your bookkeeper. It really does provide the opportunity to have your eyes on the reports and the ability to compare periods, year to year, month to month, quarter to quarter. Just visually seeing those numbers, because most of us, I feel, are visual learners. So just seeing those numbers really does put into perspective how your business is doing, and it does kind of inform how you move forward as a business owner. So that's one, and the accountant or the bookkeeper will actually help you stay organized so that they can do their job. So it really does stress the importance of having that accountant or bookkeeper in your corner, working with you as a partner.
For sure. Amazing. Andrew, man, really appreciate it. If someone wanted to reach out to you, learn more about your services, where's the best place?
I'm all over the website, lnm-cpa.com, or you can just Google us. We're on Instagram, Facebook, Twitter, mainly Instagram, and our YouTube page. I put out a few very helpful videos, just information for business owners. It really helps on my end to minimize those questions, so I can just, watch this video, there's the answer to your question.
For sure.
But yeah, LNM Accounting Solutions.com, LNM-CPA.com, or just Google LNM Accounting Solutions.
Yeah, we'll put that all below. This was great. I feel like, maybe something to discuss, having like a regular accounting tax round corner every so often. I feel like this is going to be a very popular episode that people will get value from. So, Andrew, really appreciate you taking the time today.
I really appreciate.
One more thing. We have one more thing though, Costa. The question we ask everybody at the end.
Okay. Yeah. I usually ask this at the end, usually to contractors, but this could be good for you. If you can put a lesson, a message regarding business on a billboard for every contractor in the world to see, what would it say?
Wow.
Call Andrew. All your accounting needs.
Call
me, Bob.
Well, I think this would kind of go without We'll go for any industry. I think just part of the general intelligence and just lessons learned, recognizing that each one individual does not know everything, and they will have to depend on someone else at some point for what they don't know.
That's a good one.
And that's for any professional, any industry. So I depend on contractors, to do stuff around the house. Contractors depend on me to maintain their books. I depend on teachers to teach my kids. Everyone has their strength, everyone has their weaknesses, and I think it's just part of general intelligence, and also knowledge of self, just recognizing that we don't know everything, and so someone else has an area of expertise that we need at some point, and just being cognizant of that.
Yeah, great point.
Amazing.
That's a really great point.
Amazing.
For sure. All right, and if anyone listening this far, if you are a contractor in the trades, looking to streamline your operations, your day-to-day, and come tax season, be ready to have good preparation for your accountant and the CRA. Check out jobtable.com, sign up for a 14-day free trial, and you'd be surprised at how efficient you can be with it. So appreciate everyone listening. Andrew, once again, thank you so much, and we'll definitely be in touch.
I greatly appreciate the invite. Thank you.
Thank you, Andrew.
All right, take care.